Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to do a little bit of a market scan, futures, Forex. We're also going to look at some stocks. We got that Amazon stock that we talked about yesterday, and it was also in the weekly hot picks. So the switch on hot picks were also there. Also, on the news front, we do have our 9 EMA strategies up and ready, and the code is up as well. So I'm going to be making a video relatively soon to show you how to get that up and running. But if you're interested in the 9 EMA strategy, you just head right on over to this page. I went ahead and I left it in the live chat on YouTube. Go ahead, enter your email, give it a click, and then you'll get the download prompt. It'll come out as a zip file, and you can get on that zip file and go ahead and add that MT5 EA to your platform. So it's all ready for you. It's ready to go. I'm going to make a video here relatively soon, and that will be out probably tomorrow or the next day. And we're going to go ahead and show you exactly what you need to do if you're having any issues with the code. Sometimes MT5 is a clunky platform. It can give you some issues, especially if you're doing complex things like changing time frames, changing markets, changing anything that has different decimal points can also mess you up on MT5. Fortunately, there's a real easy way to troubleshoot this, and I'll show it to you. Just re-add the code, essentially, or you shut down the platform and go back in. So if you're interested in the 9 EMA strategy, be sure to go on and check that out. Enter your email address, get the free downloads, PDFs. It's all there for you. A relatively straightforward way to attack the market. So it's good to see everybody back. Yes, sir. Good to see you. Yes, sir. Andrea Garwal, always a pleasure. Andrea, we've got a lot going on today. We've got some interesting news that's breaking on the Epstein front, and this is just kicking off, and this is going to get pretty ugly. We figured that it would. It's going to get pretty ugly, and it's going to impact the world of finance. There's no question about it. It's just a matter of time. So what we're seeing right now is sort of the preamble or the precursor to the big market moving events, and those are coming. Let me see, 512 Eli, MT44 live. Live. Now, good for you, Eli. I personally am doing MT5. The code is for MT5. You can try to put it in MT4, I guess. Maybe take the code itself, throw it in a chat GBT and say, translate this into MT4. For me, I focused on MT5 because that's the premier platform over at Switch. It also gives you access to many, many different markets. So if you're interested in the 9 EMA, it's over there for you. Lita, good to see you, Lita. Welcome. Let me see, Jared, big ups. Yeah, big up day, all right? Broke over 50,000 in the US 30. That was a big one. That trade's over. We didn't get any retracement in front of 50,000. I can show you the compression that happened before that level. But, man, once we broke, we really balled out to the top side. I mean, it went big. So you got to really watch being short right now, U.S. stocks. It's a strange dynamic here. There's a lot going on. Tuku, good to see you, Tuku. Welcome. Tina Jing, hi, Shane. I read your switch market analysis. Really insightful. Thank you, Tina. That means a lot. I try to put a lot into that every week. So if you're interested in those newsletters and also the videos, be sure to keep tuning in. You'll have one every week before the London session kicks off. Try to get that out in a timely fashion as well. Let me see, Nico. Hello, Shane. All caps, Nico. I love it. Absolutely love it. All right, guys. I'm watching the 9 EMA strategy right now over on silver. Volatile market. No two ways about it. Silver off again 2 3/4%, but we're starting to see stability right around that 80, 81 level. So this is sort of an interesting trading idea that hasn't developed yet. I get a lot of questions on this 9 EMA stuff. Shane, what do you think is going to happen with this strategy over time? And I said, well, I know what's going to happen. You're going to get a lot of signals. And if you know exactly when to play it, and we talk about that in the educational video with your session times, if you also know which duration to play it. I don't recommend necessarily 1-minute charts. We use 1-minute charts because that gives us the best opportunity to have trade ideas during our live streams. And I want to execute the trades and show you exactly how to set the stop losses, which is the most important thing. It is the most important thing. There's no two ways about it. So when I'm looking at a trade like this, Shane, can you make a living 5-minute chart silver? And I go, well, if silver's moving, you can. But you can see right here, our RSI hasn't got outside of our 70-30 envelope. And until it gets out, you don't really have a trade. Let's go to a 1-minute. You see right here, a 1-minute got sweeped out. That would have been a loser. The beauty of it is it was a tight loser. There's something like this, though. You didn't get the sell signal on the secondary, and you ended up losing on a sell when you just didn't quite get up to where we needed to be to get another sell signal. So right now what we are doing is we are watching the 1-minute chart. If you're interested in trading it, on the XAG USD, this is silver, and you can see right in this area right here, you are going to be at 27, which is an oversold territory. So you're looking to get a buy here on silver 1-minute chart. I see this as being a high-risk trade, especially this time of day. I don't love it. I wouldn't bet the ranch on it, but we may in fact get it. One of the things that I want to show you, many of you are going to download this code and get it up and running right away. So I'm going to go ahead and show you exactly what you need to see, or excuse me, exactly what a real good sort of troubleshooting tip is. Now you'll notice, well, you can't really see them because they're behind my picture here, but your navigator, pull up your navigator, and under your expert advisors, there's a couple of things to do if your EA isn't working. Number one, you hit refresh. First thing you always do. That refreshes all the codes. The second that you're going to want to do here is you're going to want to go ahead and add this 9 EMA RSI EA. Say that again. 9 EMA RSI EA. Holy cow, that's difficult. I barely speak English. That's tough for me. A lot of you speak very, 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 very well 5 or 6 different languages. I struggle with the linguistics of this. But the 9 EMA RSI EA. So what you're going to do here is you're going to just re-add it to your chart. Very simple. You're going to get this prompt right here. Go ahead and hit yes. You're going to get this prompt right here. Hit OK. It's going to get you up and rolling. You're going to be ready to roll. So algo trading, you always got to make sure algo trading's on if you're running an EMA. So right there, boom. Drop it, yes, okay, allow algo trading, and you're ready to rock and roll. Now, a lot of times you won't necessarily see that the EA isn't firing until, you don't get a signal where you should get a signal, and that's your number one tell. But that really, if you wanted to do it on every chart you reopened, you could do that. Now, where are you most likely to get that error issue? And it's when you're switching around charts on different time frames and you're looking for trades in real time. A lot of times, those carrots, those buy and sell signals or indicators, those buy and sell indicators will get a little bit messed up on you. And that's just sort of a functionality of MT5. You see that with all EAs. A lot of times, if they don't fire, you just add them to the chart again. If all of that doesn't work, you just hit X, you get out of there, you reopen the MT5, and once you reload the platform, you're typically good to go. But in order to get that going, you need Algo Trader running at all times. And we're going to put this in the video. I'll be able to cover all this in probably 30 seconds, 60 seconds. But those are just the quick troubleshooting tips. Let's see, what do we got? Let me see. Geez. NAS 100 today was like a Monday. It was very slow. WTI crude hasn't done a darn thing yet. Let me see. T Marina, hi. Good to see you. Let me see. Yes, sir. Time for the market scan ahead of NFP. I need a breakdown for the dollar, yen, and gold. Dollar, yen had an amazing sell in the Tokyo session. Yeah, I'll go ahead and pull those up, the dollar, yen, and gold. No problem there. We're looking at gold anyways. Let me see. Nico, any FX pairs you're looking at, Shane? I was looking at the Euro USD. Interesting type of a scenario that we have setting up right there. And what are you predicting for NFP tomorrow, ANS? I'm predicting a set of numbers that are going to surprise everybody. No, I don't know that they're going to surprise anybody, but I will cover my expectations. We'll be hitting our fundamentals here in just a minute. So a couple of things that I do want to cover before we get too deep into what we're going to cover today, at least regards to trade ideas, is I do want to talk a little bit about what's happening potentially in the crypto market. So let's go ahead. We had a trade idea out earlier this week that I put out yesterday. Bitcoin on the bear to open week 6. And you can see we sort of came right down to this area. Since then, we've rejected it, the 62% level. We were looking to bid 58s, just over 58s, give ourselves an opportunity maybe to get in on a $2,000 or $3,000 move. Just didn't happen. We didn't quite get it yet. I'm more than happy to leave that support level in play there. But for right now in Bitcoin, you're back on the bull. Now, the big thing I would watch, and I understand that this is a yearly Fibonacci retracement sequence. I get it. So a lot of people are going to say, Shane, you're looking at yearly numbers here. And I go, yeah, I am, because they're incredibly valid right now. And they're important because our daily ranges are so huge. Big daily ranges mean huge volatility. Huge volatility, typically you're always going to rotate towards those long-term numbers. So let's go right there. 30-minute chart. What do you have? Go right down. We rotated back up. That top side resistance level has been 70,800, 70,900. That's been a big-time resistance zone. I would be watching that closely. Be watching that area very closely. If you break above that 70,000 level, 70,900, then we could be going much higher. It could be going probably to 75,000. So definitely be careful if you're trading Bitcoin right now. It is active, but we do have resistance in place, sort of at 70,875-ish. I'm interested to see what happens if we test that zone. I think we are going to test it probably before NFP. That's for sure. So you definitely want to keep an eye on that for Bitcoin. As far as what we have this week, you guys pretty much already know the economic calendar. I won't have to tell you again. Tuesday was retail sales. That's today. I'm going to briefly touch on those numbers. Wednesday, U.S. NFP. We're going to preview NFP. And then Thursday, UK GDP. And then also home sales. I think that's a pretty big day, one that we're not really talking about a whole lot. But I do believe that we're going to have an opportunity to trade that with a little bit of vigor. So I'm interested. I think it's going to be a lot of fun. And then as far as Friday goes, U.S. CPI. So we're going to have NFP live for you tomorrow in real time. I'm going to have CPI live for you Friday. So I'm going to be getting up very early this week. That's just sort of the way that it goes. But tomorrow, the big event, NFP, U.S. non-farm payrolls, the first numbers that we're going to see from 2026. It's a big deal. It really is a big deal, so keep an eye on that. This one's interesting here. The U.S. 30 has broken above 50,000. When I look at something like this on a market call, we had a trade idea here. It was just an absolute failure. It was an absolute failure, and one of the things that we don't do is I don't run from losers. A lot of people that you're going to see online that are going to say, okay, here's my trade idea. They're going to get a loser and they're going to run from it. I'm not going to do that. I'm going to try to figure out why this level didn't work. 50,000, I don't think we're done trading 50,000 yet at all. I think that we are going to be trading this level for quite some time. However, you do have to respect the bullish nature of these markets. Right now, we broke above 50,000 in the Dow, and we're still trading in an incredibly bullish fashion. 50,000 is still a big deal. Now, the shorts, you can't hold the shorts anymore. You had to get out. We talked about the stop loss being pretty much right there at 252, 50,000, 250. There's nothing wrong with that. That's a pretty good trade. This is interesting, though. This is what happened last Friday. We saw really the big run-up and then the close on the bull, which shocked everybody, including me. Usually on a Friday, you do see a pullback and sort of a more neutral settle, and then you gapped up on the open. At this juncture, I really don't know. I really don't know why. I don't have any idea why. Don't know. Don't really care. Just know that's what happened. I'm looking at fundamentals. Maybe the Iran strikes are off the table for now, and that was a bullish market driver for the U.S. 30. Maybe. I think that's grabbing. But you did test 50,000. You got a little bit of short-term compression in here, but we didn't get that pullback we were looking for a couple hundred points. And that right there, frustrating trade, but definitely a loser. No two ways about it. This one lost bad too. Was never really positive. This trade right here, or excuse me, that move took us to 49,823. That was about the maximum you were ever ahead was 100 points, 100 pips. That was not very much. For a level like this, we should have got a minimum of 250 to 500. Didn't get it. That tells us there's not many sellers there, and that's a very, very bullish sign for this market. So 50,000 is long gone here for the U.S. 30. I would be looking to buy pullbacks probably from 50,000 at this juncture. Let's go to a daily chart, and I'll show you what I mean. Now, one thing that we did have outlined, and we sort of got smart to what was going on, was this bullish flag. Now, you probably want to back off on a weekly, and that gives you more of a look at that uptrend, how steep that long-term uptrend was, and then sort of the sideways trade that we saw, really tight trade for 3 weeks, and then a market break up above it, and then break up above 50,000. So this is a tough market to be getting involved with any sort of meaning to the short side, especially with 50,000 gone. So you can see already what's happened today. Very simple read. Pull back, you hit 50,000, and you blew up from there. 50,000 is officially support until proven otherwise. Spike low, there's sort of a spike high. Potentially you could get maybe a pullback from like 49.8, but I doubt you get it. 50,000 really was the big level. So when we're breaking down how to trade an asset, how to trade anything, key levels are important. They're a big deal. If you ignore them, you're sort of doomed to failure over the long term. You'll see things happening with price, and you won't understand why they're happening. Typically, the key levels draw participation to the markets, and that participation is what generates price action, and then we get a run to a different value area. Long talk there. You don't really need to know all that. You just need to know that 50,000 is a big deal. You've traded it 3 days in a row. I would be surprised if we don't trade it for the rest of the week, but then again, I genuinely don't know. This was definitely a chaotic look at a market that we expected to get the compression right there, and we didn't get it. Now, what we could say as well, Shane, this has got compression over the last several weeks on the daily, and then you got the big sweep higher. And what I would argue with that is, well, what was the catalyst? We traded in this phone booth pretty much all of January, and then we broke. So you're saying that we broke above January's high? That was the catalyst? Maybe, but it's thin, especially with a level as big as 50,000. This one, I'm scratching my head. I don't actually get confused very often by price action. Sometimes things go your way, sometimes they don't. I look at that and I really sit there and go, man, what happened? What the heck happened? Don't know. Now, there's a chance, especially on this daily, especially on this US 30, on this daily chart, maybe we get today, maybe tomorrow. If we get an inverted hammer up here, then yeah, I'm probably going to be thinking of taking the short. For some reason, I don't believe we're done with 50,000 yet. I could be wrong. Have been wrong in the past. I was wrong right there. That's never any fun, especially when you do this stuff in public. Typically, people come out of the woodwork and say, nice one. And I go, hey, listen, that's why we have risk management. You lose a trade here, you lose a trade there. That's the way it is. You just don't let your losses empty your bank account. That's the bottom line. That's for sure. Yeah, we're going to dive into the Forex here in a second and get into our NFP preview. I do want to cover some of the news of the day first, though. ADP employment change weekly. That doesn't mean much to me. The reason why we'll even talk about it is because NFP is tomorrow. Came in a little bit better than expected, I guess. I don't know. I wouldn't look at that number at all, but it was released today, and a lot of people were. I saw it in the news as well. NFP is what we're focused on for tomorrow, and that's the big one. Retail sales month over month for December. You'll see retail sales were flat. That's a bad number. That's a flat-out bad number, and the reason why it's a bad number is because it's December. December is a big deal from a commerce side of things. We look for holiday spending, holiday season spending. All that happens in December, November and December. But December retail sales, that means that purchases were down, and that's not good. That typically signals consumer sentiment's down, which it is, and it all sort of points to an economic contraction. Absolutely surprising number. Absolutely surprising number. Very dry, excuse me. Man, it gets cold here. It got cold last night, about, 15 degrees Fahrenheit, which is below 0 Celsius, I believe. When it gets that cold at this altitude, it gets very, very dry and hard to breathe, not as much oxygen. So I'm going to do the best I can here, but you definitely see that retail sales number was brutal. Here's a good look at it. U.S. retail sales unexpectedly stalled in December following a 0.6 increase in November and falling short of forecasts. There you have it. That's bad news, and you can also see your chart right here. What does it mean, big picture? Well, I mean, it's not a very strong showing. You can see we've had over the last 3 years, we had sort of a big run there, sort of a nice period of growth there, but some negative prints over the last year. That was a negative one last year as well for January. Now, the big thing you have to remember is that was not necessarily a great period of time when we start talking about the markets and what was happening. About last January to April was very tenuous because of the tariffs and things. Then we saw the big rally, and then we saw sort of this pullback, and then we got strong, and then now we're weakening again. That's not a very good year for retail sales and consumption. Definitely don't want to get too fooled about that. Okay, so U.S. non-farm payrolls, that was sort of the question at hand. What do we want to say about it? What do we think about it? Well, here's your expectations. The market believes that earnings are going to come in static at 0.3. They believe the NFP is going to grow from 50,000 to 66,000, and they also believe that the unemployment rate is going to remain static at 4.4%. Now, big picture, I don't know that anybody knows what the number is going to be. This is the first installation for January, and it was already delayed, really still log jammed. Our data sets are still messed up from last fall's U.S. government shutdown. So this is going to be the first real group of numbers that isn't going to be lumped in with another group of numbers. You remember back in December, it was sort of, we saw those reports. They all came out at the same time. And then even in January, we were still disjointed with December's numbers being delayed a month. We're trying to get back on schedule still. But this is the first full month. They needed an extra 5 days or whatever, extra 4 days to get this number nailed down. This is going to be interesting. First print of 2026. I think it's going to be a big surprise. The question right there, ANS, what am I predicting for NFP tomorrow? I think it's going to be bad. I think you're going to see a bad NFP print. I think it's probably going to come in right around the previous release, 50,000, somewhere in there. I think the unemployment rate's going to creep higher, up to 4.5%, maybe 4.6%. And it's going to suggest that, yeah, you do need interest rate cuts. I think that's what the whole talking point's going to be. I expect an outburst out of the White House. I think that the economic team's going to be angry about interest rates. They're going to blame the Fed for jobs maybe being in a bit of a pullback scenario. That's my read. That's my guess. The reason why I say that is I don't like those retail sales numbers. I don't like where consumer sentiment is. We've also seen big-time layoffs out of the tech sector. We've also seen big-time layoffs out of the governmental sector. We've seen a lot of layoffs in the last year, and I think it starts to catch up with you right now. Universal, good to see you. Universal and Ralph H. Good to see you, Ralph H. Welcome. So that right there is what I'm talking about. I think it's going to be a bad set of stats. We're going to find out. We're going to find out relatively soon. I'll have it live for you. We'll be on at least 10 minutes before the release. I might come on even earlier if I got something to say or some different levels to look at. All right. Not bad. Not a bad look at non-farm payrolls. I don't know that there's any reason to go any deeper than that. I'm expecting a surprise. The last thing I'll say is the backward revisions. The revisions are going to be everything. The last jobs report, we revised things down in a big, big way, and I expect more of the same. I really do. I think that these numbers are delayed and they're highly suspect. All right, let's get on out to the Euro-USD. Euro-USD 4-hour chart on the 920 EMA crossover. You can see to open the week, you had a buy signal. Now, one of the things that you really do talk with so many traders around the world. I had a great talk with a trader from the other end of the world earlier today about the trading, and some great questions were raised, some really hard questions. He just asked me straight up, how do you put a profit target down? Where's the best place to put my profit targets? When I'm moving my stops to break even, how many pips does it have to go in my favor before I move to break even? What should I even be moving it to break even? These questions are hard because they're different for everybody. And I give you some pretty good guidelines to work with. If you're struggling with short time frames, especially on one of these crossover strategies or a 9 EMA, go to a longer time frame. That's my first troubleshooting tip. Cut your leverage, go to a larger time frame. If you're having trouble with your profit targets being hit, bring your profit target in a little bit. Be more conservative. Make sure it's at least a 1-to-1, but maybe if you're never hitting your profit targets, 1-to-4s, 1-to-5s, 1-to-6s, maybe bring them in a little bit. If you're getting stopped out consistently at break even before getting your moves, consider not moving your stop to break even, or consider taking it out a little bit further. That's really what it is. And with trading, you have to be able to make sense of your strategy. It has to make sense to you. You have to be dialed in and say, okay, I believe in this. This is what I'm going to do. And there's only a few ways to do that. Number one's experience. Number two is backtesting. I'm not the biggest fan of backtesting. You're probably not going to hear that anywhere else on the internet, at least in this trading space. I am not a fan of backtesting. I find that most traders that backtest, they end up backfitting the data to what they want to see, and they end up with a bunch of results that aren't based in reality, and they're not scientific. So if you're going to backtest, build a scientific, really a robust backtesting study. Don't sit there and just backfit data. Don't do that. The second thing I would say about backtesting is make sure that you're comparing apples to apples and oranges to oranges. A lot of folks are going to look at a Forex pair like the Euro-USD. They're going to backtest it, and then they're going to compare it to maybe an index futures contract. They'll be comparing the different time frames to each other. It's not at all the same thing. Apples to apples, oranges to oranges. Very, very important. Now, each one of those topics probably spurred 50 questions, and I understand that. And I can answer probably 40, 80, or 50. But I want to say that when we look at something like this trade, it was just a great segue to talk about some of these challenges that you face every day as a trader. How do I make decisions with that signal? Well, we know that we've got a crossover. We know we've got a 4-hour chart. We've got a 9 EMA crossing over our 20 EMA and just absolutely rocking north. The bid down there was, 1835, and you're up at 1893. Great move. You caught the early move of the week. That's a beautiful thing. Where could you put your profit target? Well, I mean, you could get a number of different ways. You could shoot for this order block right here, this not rally-based rally, but I don't know, fall, rally, fall, whatever you'd call that, something like that, or fall-base, fall, whatever you want to do, whatever you want to say about it. I don't know. This order block right here, though, we're pretty good at spotting those. That would have been a decent one. What about your stop loss? Stop loss, I'm always a big fan of putting it down beneath the swing low. Maybe that was too big. 4-hour chart, maybe you don't have to do that. Maybe you bring it right up beneath the trigger candle. How about your profit target? If that's going to be my stop loss right here, then I could probably get away with something right in here. Maybe a 1 to 2, maybe even a 1 to 3. So I always encourage everybody to think about the stop loss first. Build your trade around what you're risking. That will help you. That will help you be in the market for a long, long time. That way the losses never get away from you. They're never bigger than what you can handle. All right. This is going to be a more advanced topic, but I'm going to go ahead and cover it anyways. 4-hour chart. A lot of you love the opening range breakout strategy, the orb. Look at that little beauty. Look at that. That's the first 4 hours. That's the second 4 hours. You've got a 920 EMA crossover that corresponds with your orb. 4-hour time frame, guns up. That's tough to beat. All right, we just got a trading signal right here, RSI buy on silver, 1-minute chart. Let's go ahead and execute the trade. So the question right here would become what? Did we get filled? Okay, we're filled. You'll notice that spread was absolutely huge. That's where we got filled right there. Anytime you're trading something like silver and you use a market order, that could be problematic. In any case, we got filled up there. Where are you going to put your stop loss? You got a couple of options. You can put your stop loss right there beneath your trigger bar. That would be a very tight scalp. That's what I would say, a very tight scalp. Or you can put it beneath the swing low and maybe look to take more of a profit. Maybe look to do something like this with a 1.5 to 1. Maybe calling the bottom of the market for this afternoon. Maybe bringing it right in here. Maybe at just a flat 1 to 1. You'll notice how difficult it is when you're dealing with that big spread. So always remember that spreads can absolutely really hurt you. Maybe it's better to enter when this thing pulls back to your 9 EMA. There's a lot of things that you can do with these strategies, and they're all designed to get you thinking. So this one right here, we executed this trade. Absolutely horrible fill. That's okay, though. We're not going to worry about it. This right here, I'll go ahead and leave that beneath this swing low. But if you wanted to bring it up and be hyper-aggressive, you could do something like that. Just remember that it's going to cut down your possibility of success. You're not going to win as many trades just because you're playing really, really tight. Something like this, though, we'll go ahead and let it bleed against us. We only put on that 10%, a tenth of a lot, and you'll notice that right now we're fighting the pressure. You're off 3 1/3%, and now the market's sort of basing out right around our 9 EMA. Very, very compressed. We're down a few pips, but we're still in the trade. The real question is what do we want to do from here? Well, we got to wait and see exactly how this thing pans out. But that's a good look at execution with all three of those facets. You're looking to get your stop loss down. Okay, we did that. We have options on our stop loss. Let's just go with this basic execution right beneath the swing low. Profit target up here, at least at a 1 to 1, at least. That's going to give us an opportunity maybe to succeed, and then we could go do maybe something like this if we're a little more ambitious, looking for a bigger run. The beauty of it is that the strategy and the code is firing. We know that. We were right here. We were in oversold territory. Within 7 bars, we came back. We got our bid signal, which popped up as our gold bar. And then right here, you're going to get a little bit of price action, and then potentially we'll get a run at our profit target, or we'll get stopped out. Remember, 1 to 3% on any given trade. Maximum of 3% of your available capital. That'll give you an opportunity to take a lot of these trades and maybe dial in which time frame, which market, and maybe the exact tweaks to the strategy you want to employ. Now, we'll see if there's a demand for this type of stuff. We'll make a whole series of videos on the different ways you can improve your performance or different options for trading this. But at this juncture, let's just keep it really simple. There's no reason to go any more difficult than that. Right here, I'm not real pleased about it. There's our hammer formation. If we don't break up soon, we're probably going to lose. This time of day, is it right to be doing this? It's questionable. You're after the London close. Things typically in metals get very quiet in the U.S. afternoon, especially as we roll towards that traditional COMEX futures close. This trade right here looks like we're going to get banged out. I don't know. I guess we can sit here and watch it get banged. It's coming off. The only great thing about getting stopped out is if you get stopped out quickly, then you go, okay, rip the Band-Aid off and come back for your next trade. This is one of the reasons why I like giving these a little bit more room to work, but it is more risk. Right here, we're getting hit for what, 270, 280, 290, 300 would be somewhere in our risk. 1 to 3% of my total money available gives me an opportunity to succeed. One thing that you see a lot, this swing low Typically, you got some bidders right there. We don't want to be right beneath that swing low, 1 pip. We don't want that. We want to make this thing prove that it's going to keep going down, and it looks like it is. So we're going to get stopped out right here if I had to wager on it, and that's fine. You have to rip the Band-Aid off. You cannot sit here and try to ride one of these out. You absolutely can't. It is not what you want to do. Now, if you find yourself in your success rate being low on any strategy, whether it's this one, the 920 EMA, any of it, adjust your time frames. Focus on when you're trading. Are you trading during an active period? All right, adjust your time frames. If you can't make it go on a 1 minute, and the success rate, it's not looking that great on a 1 minute chart. It's great for showing how to execute the trades. It's not that great. I would be looking at a 5 minute, probably 15, 5, 15, 30. You will notice as those time frames go up, probably your success rate's going to go up as well because you're getting rid of a lot of the chop. However, the most profitable time frame may be like a tweener. It may be a 15-minute time frame or a 5 minute. And that's sort of where you put your thinking cap on. And you go to work and you say, okay, I've got the framework of a strategy right here. How can I make this thing better? That's what you should always be thinking about when you're trading. How can I make my performance better? Am I missing too much? Are all the good trades coming early in the session and I'm waking up too late? Adjust what time you wake up. I mean, really, always be thinking about how to improve. Now, we're still getting hit here. I do like where our stop loss is, though. We withstood one test. It'll either go in our favor or not, but I'm happy with that. This would be a situation where if you play tight up here, you're already out. I don't know that it's worth already being out, not on a 1 minute chart. We'll wait and see, though. Trade's still negative. Really hasn't gone positive for us. That spread was a tough one to overcome. Not really something that I'm too interested in. Let's put this up there just a little bit more, make it worth it. All right, let's see. We have a couple of questions here. Tina Jing, I totally agree. All right. Thank you. Let me see. Gold is dancing around the 5K mark, as you predicted. Yeah, Bab. We'll look at gold here in a second, and also some other Forex pairs. We got to look at the dollar yen as well. That was one of our questions. Let me see. Nico Letterman, what if you're not getting a fill at 50% retracement for that one-to-one move? If you're not getting filled, you have a couple of decisions to make. You either let the trade sit there until it gets filled, or you pull it and you find a different entry. For me, usually if I get hit once or twice and I don't get filled, I'm out. I have no desire, because what happens inevitably, it'll come down and your entry point will get hit. Your entry point will get hit, and then what happens? You don't get filled. It goes up and gets your points. It comes back down, and then if you get filled that time and it goes down and it's a loser, it's too hard mentally. So usually if I get hit once and I don't get filled, I pull it. It's not fun, but that's sort of the life we lead as traders, especially intraday traders. You have to figure out what you can handle mentally. For me, it's got to be as easy as possible. I don't like sitting there not getting filled and then him-hawing around hoping that I get filled and that the bidders are still there. It means that we needed to be filled that first time, and if it happens too much, I go find another broker. That's the bottom line. Or I start shading my entries a little bit more to make sure that I'm in on the move. Absolutely. Rally-based drop. That's right, Tina. Thank you for reminding me. Rally-based drop. Rally-based drop. Rally-based drop. Got it. That's for sure. Gordon Williams, do you use TradingView? Yes, I do. For my analytics, I use TradingView. This MT5 platform, though, it is offered by Switch. It's the premier platform over there. And I have to tell you, this order entry with the drag and drop functionality, I really like. I mean, I could see myself trading this directly from the charts and managing my trades with the drag and drop on MT5. I could easily see myself doing that. I mean, it's very, very simple. I typically use a trading dome or a depth of market to trade futures, but this is doable. This is doable. It really is. The drag and drop I really like. It's fast. It's easy. I like it. I like it a lot. Okay, dollar yen. We had a question about the dollar yen. Here you can see on the 30-minute chart. This is an absolute, just a textbook look at a market that's plunging. I mean, it really is. And we could say it's an Elliott wave. You know, maybe that's a 1, 2, 3, 4, 5, and then reset. You know, maybe is that a move back? Not really. It's just getting extended. But a very, very nice formation. Very nice formation. Very uniform. 1, 2, maybe 3, 4, 5. You know, maybe that's a 1, 2, 3. The bottom line is you're really trending to the bear here. I want to go ahead and see what we have going. What could we be looking to do here with the Japanese yen? There's a lot of things we could do. You know, what do we want to do? Is it tradable? NFP is going to be a big deal. We're going to have to understand that the market's more than likely going to jump all over the place. So you got sort of a spike low to a spike high there with Fibonacci's. 62%, 154 and a quarter was already hit. That one already paid off. So maybe the next level is going to be 153 and a quarter, somewhere down in here. Probably, more than likely. As far as what would we do you want to sell right now? Boy, it is hard not to, isn't it? 4-hour chart. Very nice. $154.90. Not bad. It's not a bad area. We could definitely sink our teeth into that sell. It's right around 155, right under 155, 154.90. It's with the trend. The trend is there. The volume's been consistently growing. I probably wouldn't have a problem at all selling that up there, maybe for 25 pips, 35 pips, something like that. Pretty good trade. If you absolutely had to take one, I just would not. I don't know that I would be executing from there during NFP. That's a little bit that's asking a little much, especially on a 4-hour chart. You probably want a longer time frame for those macro levels that are going to be a little more reliable for you. Something there. I do want to see this, though. I want to see this dollar yen on this 920 EMA crossover. All right, this is fascinating right here. All right. Right there was your sell. Very nice on a 4-hour chart. Let's take this down to a 30-minute. Crushed it right there to open the week. Wow, look at that. So what are you really looking for right this minute on this 920? Let's say I was trading 920 30-minute chart. What do I want? Deep into oversold territory down here. Potential crossover right there. Taking the rally, maybe bidding, looking for that 155, taking a position. It's not a bad trade. It really isn't. The only question is how does it develop? And do I want to sell rather than buy? I probably would want to sell. I mean, you're off almost 1%. I like my Fibonacci sell better than this crossover, but we can build the case that we should be looking to trade, maybe buy a little swing low and see if we can't get a little money out of this dollar yen. Big picture, though, still fairly bullish, or excuse me, still fairly bearish. I can't speak today. It's still fairly bearish. And what I would be looking for is one of those macro levels going into NFP. We know the dollar yen is going to be a mover and a shaker. We know it. So this will be probably one of the pairs we focus on tomorrow. All right, I did have a question on gold as well. Gold trading 5,000, absolutely, and it's an absolutely good observation. BABG's 50%, right around 5. What happened today? 15-minute chart. There it is. Really been testing this area, but really going back to sort of that mid-London session right here when volume really starts coming into the gold market. Look at that. Nice test of that zone. Beautiful bounce. Look at that one. Early U.S. session, about an hour in. Nice test of that zone. Great bounce. Do we take 5,000 again today? Probably could. You probably could get away with it. Right now, bullish, sort of slow from what we've been seeing in gold. But I think that's a pretty good level. 5,000. One question I did get earlier today when I was speaking with this trader, he may be watching now, asking me about support and resistance levels. This support zone has been pretty good. Just remember, as it gets tested over time, eventually it will break. And when it breaks, you're going lower. No question about it. The more times that this area is tested, the greater chance it has to lose its efficacy. Believe it. First couple times it gets hit, it's probably pretty good. Third, fourth, fifth, sixth time, your odds go up of it breaking and not holding every single time it's hit. So I like the first and the second time through. For me, first and the second time through. Third, fourth, fifth, not really interested. Odds are a lot of those bidders that have defended this level are probably exhausted, and that could be a real problem. Okay, let me see. John Charles, good to see you, John. Silver on the 15-minute looks like it broke below the 80-87 support range. Isn't that concerning? It's not concerning. I mean, you could go short. Let's see. Is this thing, you can sort of see the systems trade that we put on is making a comeback. Will this market hold? Will silver hold and rally? I don't know. All we do know is we know where we have to get out of the market. We've got our stop loss dialed in. We know that we're looking for a move. Maybe we get a rally up here. I mean, you could probably take it up there at this point and try to get a runner at almost what a 1 to 2, 1 to 2.5, something like that. I don't have a problem with that. But am I worried about the downside of silver? Well, I do know that we're fighting a trend. I know that we're off 3.12% today, and that's a problem. If we're taking a long trade based on a short time frame, that's a problem. However, if we are correct, then we may be onto something. So let's go ahead and take a look at what you mean. 15-minute chart. Silver has broke support at 87. 80.87. So the question at hand is, are we worried about holding longs beneath 80.87? You know, I was talking about comparing apples to apples and oranges to oranges. And when we look at like a 15-minute chart, is it really the same as a 5-minute chart? No. Or excuse me, a 1 minute? No. Very different dynamics here. As far as breaking this area right here, I mean, I don't really know sort of your support zone, what you're referring to. You could have been looking maybe at Fibonacci's based on this. 80.87. No, that doesn't really line up. We're starting to see the bidders come into the market. As far as your support, I would be a little bit not concerned. I guess you could say right here, this double bottom, maybe this order block. I'm not really seeing the support zone there, though. I'm not seeing it. You could say maybe this would be a demand zone, something right here. We could say, maybe. For me, that's not really a factor in how I would trade this today. Just my opinion. I would see this as more. I'm not going to argue that it's not a downtrend. Boom, boom. Now what are we doing? Are we getting ready to extend lower? It's possible. What really is going to determine the fate of this trade is if you get sort of that bounce right up in here, maybe even back to that 87 level, 87. I mean, that may in fact pay us off 81.46. That's more of a risk. But if we wanted to build on that order block, it's going to be a tough one. You could be right. For me, I don't know that that's huge support there, though. Definitely a downtrend, though. No two ways about it. No way to sugarcoat that in silver. I mean, we're definitely coming off. All right, everybody, I'm going to go ahead and sign off for right now. We're going to be streaming a lot this week. I got a lot to prepare the rest of the day. Tomorrow, bright and early, we're going to be in the saddle for NFP Live. You're absolutely welcome, John. We're going to be in the saddle for NFP Live. I think it's going to be a fun session. We'll be sure to answer any and all questions that you have at that point. We'll be trading it live. Probably be trading this 9 EMA strategy live. It looks like the silver trades wants to go positive. We're back right up to that break-even point, so we'll see how it pans out. We'll also talk a lot about the 920 EMA strategy. Remember, if you missed our Switch Markets hot picks, for this week, our Switch On Hot Picks, go ahead on over to YouTube and check that out. That video's out on our Switch Markets YouTube channel. And if you're interested in this 9 EMA, go on over to that page. I put the link in the live chat here on YouTube and in the How to Trade community. Go ahead and check that out. If you're interested in a private dialogue with me, I like to make time at least once or twice a day to answer any and all questions that I get over at the How to Trade channel. So go on over to howtotrade.com. Get yourself a free account. Click on my picture, send me a private message, and say, hey, how you doing? All right, guys, that's a wrap for today. Hopefully tomorrow will be a little bit better. It'll be a little easier to breathe. It's a challenge here today. Very cold, and this air, we're above a mile high in altitude from sea level, so there's not a whole lot of oxygen at this elevation. All right, guys, you have a fantastic trading day. Thank you for joining me. It's going to be fun tomorrow. Joining me for NFP Live. We'll get you some key levels. We'll talk about what we should be looking for and see if we can spot a few trade ideas, maybe even scalp a few bucks. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.